Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, August 27th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Tuesday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll notice the ES is currently seeing a little bit of weakness off the overnight highs here, pulling back toward the 5650 level and pulling off those levels just slightly here. Overall, this market is inside day, heading into the RTH Open, just 22.5 points of range. 22.5 points is 36% of ADR at the moment, so very, very compressed. You'll notice as well that we are still inside a very compressed range over the last several days. This is a 7-day narrow range. I have a 6-day listed down here, but with today's price action, we can make it 7 developing days of compression here, and this is kind of what we see right here. 36% of average range, a total of 103 points for those 7 days, and normally we'd have something over double that, 265 with current volatility. The upper end, the 125% projection in case of expansion, would be 330 points. So that's three times what we're currently seeing at the moment. So we are clearly building some significant energy here with the market awaiting NVDA earnings. That will be tomorrow after the closing bell. We also have some big reports coming out, including GDP, PCE price index, core PCE price index, and things of that nature. So we have a ton coming up here later on this week. Core PCE prices are Thursday, GDP Thursday, and PCE price index and core PCE price index are also Friday there. So we have a ton to look forward to here as we start to head into the middle and latter portions of the week. But this market clearly compressed here. We are approaching a holiday extended weekend as well, with Monday, a Labor Day holiday in the United States. So we could continue to see a bit more compression, but soon expansion from this range will occur, and we could be looking at somewhere between 265 and 330 points of range. That would be the expectation once we break out of this range. Until then, it could be mostly range bound. Right now, a little bit of a downward motion here within the range could be seen today, and taking out the 5620 zone, 5625 starts to open up a little bit more weakness here, but currently compressed until proven otherwise. If we take a look here at the NQ, very similar price action with regards to compression. You can see here today, not quite, well, I guess it is technically an inside day, but right there at the lower edge of the previous session's range. 1, 2, 3, 4, 5, 6, 7. You could even call this an 8-day compression right here. Let's make this one more day higher, and you'll see 36% of ADR with a current range of 577 points. This thing would normally average nearly 1,500 points, 1,480 points of range over an 8-day period. And if we're looking for an expansion phase, that's closer to 1,850 points right now, which is a pretty wide projection here given recent volatility. If you'll see right here, we really haven't seen that type of volatility in a good long while. 1,850 points, for example, was only seen during this massive dump here and then all the way back up. So really 2 times here we saw it, and that was only recently. The rest of the year, it's fallen way shy of those expectations. So not sure that we should look to forecast higher toward that 1850 target, but certainly we could get somewhere around 1,400 points of range up ahead once we get expansion from this range. So this range right here, building energy for a big time move, currently pulling back just a little bit here. A failure at 19.5, and you start to open up a bit of a rotation back toward VWAP below an 18.5. That would be a 1,000 point move right there alone. All right, let's take a look here at crude oil. You'll notice with crude, this thing has been very bullish here lately. We had a massive squeeze. One of the things we talked about was This market wanting to stay above 72. 72 to 82 has been the bulk of the range for this year. If we get a little bit outside of it, it drops back. If we get a little bit below it, it pulls back as well. On that recent rejection at 72, we were looking for a first test target back towards 76.55, and we got it in the previous session. 76.55 is that level right there. It's the key range midpoint. The edge is the key range low at 72.48, and the upper end of the key range is 80.62. So that would be the next level up to go get for this market. But again, if you go back to the beginning of the year here, you'll see how this market has mostly stayed between 82 and 72. That's been the bulk of this range right now. Currently an upward bias here at the moment. Inside day right now, so compression, 45% of ADR and less than $1 of range at the moment, but with an upward bias until proven otherwise. So working its way higher here, looking towards 78 and again toward 80 up above. If we take a look here at gold futures, you'll see right here gold futures is currently showing a bit of compression at the highs overall, has continued to maintain a very bullish bias as well. It's eaten through the 2480 upper market structure level, pushed through it on a number of occasions, held it and rallied. We're sitting here below 2560 at the moment, continues to honor the bullish Pima trigger zone. This thing is very, very bullish. After new highs, we have seen some counter trend rotations. That's very normal. It seems like these counter trend rotations are getting smaller and smaller as well. That bodes well for further strength to the upside. We could be looking at 2600 up ahead for this market as bulls continue to dominate this trend. Looking at the YM here is very interesting at the moment. This was our key market to watch for today in our trading room yesterday. One of the major things we saw here is this reaction right here occurring at the key range high. That's the 41,427 level, and the rejection occurring off the 41,400 level. So our early idea was any test into 41,400 could be a sell today for a 400-point drop back toward 41K. 41K could be in play for the YM in the best case scenario here. Right now, this market averaging 391 points per day. So somewhere between 350 and 400 points of range could be in play off the 41,400 level. Can we get back toward 41K, maybe 41.1, somewhere in that zone? Could be a nice downside target for this market. 41K is also the previous week's midpoint for the YM. So looking for a little bit of a pullback here, but has maintained quite a bit of strength here, especially against tech. If we take a look at Bitcoin, Bitcoin had quite the expansion phase on Friday. We mentioned that this thing is building quite a bit of energy here. It has apexed out, and we were looking for a big breakout opportunity, some sort of transition style day. We likened this range right here to the recent range that had developed back here, and over here we were looking for about a 10,000 point move, and we basically got just about 10,000, 62 to 72. This time around very similar, rallying off 60K, looking for a move towards 70K, but you can see right now after Monday's trade we've kind of hit a snag here at the previous month's close and midpoint and pulling back a little bit right now. This market continues to trade within the larger trading range, which is basically 74 to about 56, and we continue to see a little bit of an upward bias here, but it has been notably sluggish right now. From an intraday perspective, working a little bit lower, trying to find an early low. If we take a look at Ethereum, this one also had a bit of expansion Friday, although not as strong as Bitcoin. We were looking here at this compression, got a nice little breakout here, but again Monday and now here into Tuesday pulling back, still finding resistance at 2800. That's the big level for this market. Got to get through 2800 to start opening up a return back toward 3400, and 36, and right now that level providing some resistance. This thing has also been notably sluggish, especially since the spot ETH ETFs have come online. So just kind of mostly range bound here, building some energy, needs above 2,800 up ahead. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.